We mentioned this Barron's piece over the weekend looking at Gen Z, which is who they've grown up either in a pandemic or being told the planet's going to end because of climate. And as a result, their risk tolerance and their FOMO is extraordinarily high. Do you see that as sort of cornered into a certain element of the market that's not material to the broader market or not?
Yes and no. I think most of as the parent of Gen Z people, I would say that they do have, at least my kids have an understanding of what's kind of real and what's kind of fake. The one thing I will say is when you're very young, you can take more risk. You can chase GameStop. You can chase these other situations. I don't think that's like part of a healthy, balanced diet, so to speak. But you know what? This is the age where you can eat junk food and get away with it. So they give it a try. But I'd like to think they come back to what I would consider more established type of investment themes.
Well, kind of related question at Interactive Brokers. What do you see in terms of retail sentiment right now?
Our customers love volume and volatility. That's basically where we see the action.
But we're not seeing either.
But we see it in individual names. So, Nvidia, GameStop, AMD, Tesla. These are like the perennial leaders. Well, GameStop is more of a recent one. And every so often you will find on our top 25 most active list some name that I have to look up because it went up, tenfold in 2 days, and everybody jumped in and started trading around it. So our customers are very trading oriented.
Are they losing money on those meme trades? Are they doing well?
I think it's kind of, I don't have any insight into whether they're making or losing money. The fact that they're still here means that
it's
at least
kind of zero sum on some level.
I think it's probably zero sum to some.
I mean, to Carl's point about Gen Z, I think one of the arguments is that if you feel like housing is chronically unaffordable, and I feel like I'm never going to be able to have that kind of orderly accrual of wealth, lottery psychology might as well take over. And I can either sort of look for the long shot and bet it, and I'm okay if I lose, or I can maybe hit the score and I'll be one of the lucky. It's crypto too is kind of fed into that.
Crypto is entirely part and parcel of that. And I will say one of my Gen Zers is basically does social media for a range of crypto companies.
Oh yeah.
And my comment is, what do your customers get out of it? But he's doing rather well doing this because that's what they respond to.
Attention is the product.
Exactly.
And meme mania, GameStop holds its shareholder meeting today after postponing it last week due to technical difficulties. Stock's been on a wild ride lately. We'll help get you ready.
Meantime, speaking of annual meetings, we're about an hour away from GameStop's second attempt at an annual meeting. Our Kate Rooney's been tracking that action and joins us with more. Morning, Kate.
Hey, Carl. Yeah, so this is GameStop's second attempt at an annual meeting. The last one was derailed after online shareholder demand crashed the website. It kicks off around 12:30 Eastern. The last meeting back in 2023 took only about 15 minutes, and there was a statement from CEO Ryan Cohen, so we could hear from him again today, and we may get some more details on how this company plans to deploy its new cash pile. So the video game retailer has been taking advantage of this meme stock rally, issuing more shares, bringing in about $2 billion in that last round. And then shares, of course, have been wildly volatile as the now famous online booster of the stock, Keith Gill, a.k.a. Roaring Kitty, got back on social media. His posts have really sparked this rally we've seen in recent months. But his live stream recently also failed to deliver any real updates or news about the company or his strategy. He does appear now to be the fourth largest shareholder in GameStop. That was after posting a screenshot of his E-Trade account showing he now holds more than 9 million shares. He does appear to have sold his call options that were set to expire this week. The latest on GameStop's financials came from earnings. It disclosed a 29% drop in sales. So far, no real sign of any sort of operational turnaround, guys. Back to you.
Yeah, I guess investors should be listening for that as well. Thank you, Kate Rooney.
No real sign of any operational turnaround? Seriously? You're not going to mention that GameStop's quarterly loss has narrowed significantly? What about the fact that GameStop doesn't have any debt other than a single low-interest loan associated with the French government's response to the pandemic? The truth is that GameStop CEO Ryan Cohen and the team at GameStop have made significant improvements to the business over the last few years, cutting costs and improving operational efficiency. To say that there's no sign of an operational turnaround is uninformed at best. And yes, the annual meeting of stockholders is today, June 17th, at 11:30 a.m. Central Daylight Time. That's 12:30 Eastern and 9:30 Pacific. I'm interested to see if there's any mention of Keith Gill and the possibility of a board nomination, given that he is now the fourth largest shareholder of GME stock in the world and the second largest individual shareholder behind only GameStop CEO Ryan Cohen. Like I've said, I would love to see Ryan and the rest of the leadership at GameStop invite Keith to join the board. Also, let me briefly address something so we are all on the same page. I've seen some people questioning the number of shares issued in the 2 recent offerings, so let me just set the record straight. This is directly from GameStop's Form 424B5 that was filed on June 7th. The first offering was for 45 million shares and raised approximately $933.4 million. The second offering was for an additional, keyword additional, 75 million shares, and that offering brought in an additional $2.137 billion. So there were 2 offerings for a combined total of 120 million shares sold and a combined total of over $3 billion raised. Combining the money from those 2 capital raises with the roughly $1 billion of cash GameStop had before the 2 offerings, GameStop now has roughly $4 billion of cash. I just want to clarify that because some people did not read the filings and have been asking me questions in the comments of these videos. So to summarize, there were 2 offerings, a combined total of 120 million shares were sold, and over $3 billion was raised. Now, I'm very excited for the future of GameStop. Solid leadership, roughly $4 billion of cash, and there have been significant operational improvements in the business over the past few years. I don't know what the future holds or what GameStop will become, but nevertheless, I'm excited for what's next. Like I've been saying, I think realistic expectations are important heading into the meeting. I would be very surprised if GameStop announced a merger or acquisition at the meeting. It is possible, but I would not expect that so soon given that M&A typically takes time. Regardless of what happens, I'm excited for the future and I'm rooting for GameStop. I'll also share this post from Larry Chang once again because it's very relevant to GameStop right now, especially so considering Larry's connection to GameStop and the company's sizable cash position. Larry posted, quote, "Do you remember when Berkshire Hathaway was a textiles company? American Express was an express mail business? Nokia was a pulp mill? Samsung was a grocery trader? Marriott was a root beer stand? Instagram was a check-in app? I don't. Businesses evolve. Other examples? I don't know what GameStop will become in the future, but I want GameStop to survive, to thrive, and to reinvent its business model in a meaningful way, and I am rooting for them." And regarding the financial markets, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers, and we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.